Good morning, everyone. It's Monday, March 1st, and this is Marv Eisen from Timeless Dollar. And let's see if we can find out some clues as to where the S&P futures market might be taking us today. Starting out, looking at MarketWatch's economic calendar, the announcements today are two manufacturing indexes that are going to be announced just after the market opened. Fear not, they are not market movers. Neither one is expected to have any material changes over the estimates. So that's not going to give us any hint one way or the other. Looking at the market trend report from Investors Business Daily, the trend generally upward since last summer was tested late last week. And if you saw my last video, you recall that I pointed out that interest rates, the spike in 10-year Treasury interest rates, is a concern and might cause a market reversal, and which is exactly what happened. Nevertheless, fear not, the news is better today. Check out the indexes. Dow is up 300 points, S&P up almost 40 points, NASDAQ as well. All the indexes are up, pointing to a strong market opening. Actually, the S&P, speaking specifically about the S&P closed at 38.11 on Friday, and it's going to open the futures now are 36 points higher. So we can look for a high opening with possibly a reversal. As you know, I talk about a Monday move that I call the fog of war move. Now, the fog of war move is strictly for Monday mornings, and it's an early move to the upside without any hint as to why that would happen. But basically, it's a feeling of good news on the part of traders. If the market starts downwards today, don't jump into the market. Don't jump into the market if the market starts down. But if it goes down for the first few minutes, hold your powder. As it reverses, if you see a reversal, then you could jump in, pick up a few quick points. This is a trade that I would advise to do as a market entry, not a limit entry. So just be aware for the first 15 minutes or so, look out for that early morning, Monday morning fog of war move. At any rate, let's now take a look at the actual market. This is the S&P, not the futures. This is the actual S&P, and we see where it closed Friday at 38.11. See right over here, 38.11. And we are at, the futures are at 38.52 now. So let's now go into the futures. We're going to close this. Let's take a look at the futures. Futures 38.52. And we can see this is a one-day chart. So the market is coming in strong. Again, the reason that the market took this tumble over here in the last two trading days is because of the high interest rate, the interest rate spike in the 10-year treasuries, not because of any particularly bad news in the equities markets, but because of the interest rate move. There's a saying in the stock market called TINA, there is no alternative. There is no alternative to stocks until bond yields spike. And then the institutions rush out of equities into the bond market. Because institutions, as I've said time and time again, and if you've taken my course, institutions are risk adverse. The one thing that you need to do that you need to be able to do as a trader is to minimize risk. The whole game is not watching your money, it's minimizing risk. And that's what I teach in my course, how to minimize risk. As a result, you're going to be profitable in the market if you know how to minimize risk, and that's what I teach in my course. At any rate, let's look at the 15-minute chart now on the S&P Emini. Overnight trading, we can disregard all these spikes. If you trade overnight, please don't trade overnight. There's absolutely no sense in trading overnight unless you have a death wish. So just don't do it. We are right now at 8:14, about an hour and 15 minutes before the market opens. So we have time to assess the market. I advise you, do your homework, look at the morning economic news. There really is no bad news out there. So I would expect the market to reverse a bit today, but end up higher for the day. But that's a prognostication which the market cares nothing about. Keep your powder dry as a trader. Remember, always be patient. Watch carefully for the reversal patterns. Reversals are the easiest indication, or the most visually perceptive indications as to a market reversal, and that's when you can jump on either to the long or the short side of the S&P E-mini market. Anyway, this is Marv Eisen from Timeless Dollar, and you have a great trading day. Be safe, and I will see you in my next video. Thanks for watching.